Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you guys. Happy Nowruz and or happy Persian New Year and happy first day of spring today. No news today. It's a pretty slow day today. The stock market's basically taking its cue from the Fed meeting and kind of rallying a little bit. So it looks like it's going to be up for the week, which is good for the stock market. Oil prices went up a little bit, so that kind of helped, gave a little bit of an extra boost. There's a few Fed members out speaking today, which could create maybe a little bit of volatility, especially if they say something outside of what was interpreted from the FOMC minutes. But for the most part, I think they'll keep in queue with what was said or other different topics and stuff, not maybe as related to it. So. Bond market today is actually up from where we were yesterday. We're up about 5 basis points, so it's a slight improvement. As you saw, we had a little bit of a swing downwards, and it's back up. So we're kind of still in the range where we were yesterday. So I wouldn't say there's really much pricing difference from where we left off yesterday. As you can see where that peak was, that's where we started off the morning and then kind of dipped down a little bit and came back up. So again, we had a little bit of fluctuation yesterday, but we're kind of in the same range. And we do have some growth. If you look at the charts, there's some growth upwards. We could potentially, if we can maintain this level, we could potentially go up further and see a little bit better in pricing improvement in the near future as well. So, but we have to kind of hold this level here around 102 to make sure that we can potentially see those coming to fruition. Otherwise, we gotta hit the top range of the previous level and may bounce downwards for worse rates. Hey, I don't know if you guys saw heard about the CFPB, but take a look at the National Real Estate Post. I'll put a link down below. You guys can copy paste it and take a look at it. But for those who are looking to buy a home, or even the realtors, this is a good message for you guys that the CFPB is relaxing on regulations for loan officers to basically not have to provide documentation for a pre-approval. So in essence, it really becomes a pre-qual. Some of the things we do personally, we've been doing, having our underwriting do full credit approval on the client. So all we have to do is find a property and then submit any possible updated documents and the property, basically the appraisal, and then that way we got most of the legwork up front completed. So that way we can close basically on time, as well as give you assurances, special listing agent, that it has been reviewed by underwriter. It's not just written on a piece of paper by a loan officer that may not have done their due diligence and such, or if there's any little quirks that might be on the guidelines that may throw a wrench into the overall plan, which sometimes makes things fall out of escrow. So anyways, I would highly recommend going forward, make sure that you have full credit approval on any offers that you may receive, or working with buyers to submit, as again, you may get a few pre-approvals that may not be worth what they should be, as because maybe the LO did not receive the documents to actually give a full approval and writing a pre-approval letter. All right, something to be cautious of. Unfortunately, we want to protect all parties involved. So especially the sellers in these scenarios, and even the buyers in this scenario, because they get mostly attached, thinking they can buy a more expensive home than maybe what they can afford. So, all right, folks, you guys have a wonderful weekend. We'll see you guys next week, but just want to kind of give you guys a heads up of some new regulations that are coming out, and take a look at I'll show you. It's they're not only informative but actually entertaining too. Take care. Bye bye.